What if I told you the most powerful financial company in the world doesn't lend money, doesn't own a bank, and doesn't even issue credit cards, yet it quietly moved $14.8 trillion last year, more than JP Morgan, Citibank, or even the GDP of entire nations? That silent empire is Visa, a company that doesn't issue cards, take deposits, or give out loans, but powers the invisible rails of global commerce, one swipe at a time. But Visa's origin isn't rooted in corporate power. It started in a humble San Francisco grocery store, run by the son of Italian immigrants. In 1904, Amadeo Giannini opened the Bank of Italy, a revolutionary idea at the time, offering loans to workers, immigrants, and small merchants when no one else would. When the devastating 1906 San Francisco earthquake struck, Giannini set up a desk on the street, lending money without paperwork, trusting character over collateral. That gamble worked. By the 1920s, Giannini had built a banking empire and rebranded it as Bank of America, the first bank to cross $1 billion in assets. Fast forward to post-World War II America. The economy is booming, suburbs are expanding, and consumers are spending like never before, often using fragmented store credit systems. Amidst this chaos, Joseph Williams, a mid-level Bank of America manager, envisioned a single universal card, one card to use anywhere, for anything. In 1958, he launched the boldest experiment in banking history, the Fresno Drop, mailing 60,000 pre-approved credit cards to residents with $300 in credit, no applications, no warnings. At first, it worked, merchants loved it, consumers spent freely, but soon, it turned into a nightmare of fraud, forgery, and defaults. Bank of America lost $8.8 million, Williams was fired, and the media mocked the experiment. But beneath the wreckage lay a profound truth. People wanted a universal card. Instead of retreating, Bank of America doubled down, launching Bank Americard and licensing it to other banks across the country, planting the seeds of platform banking. This licensing strategy allowed dozens of banks to issue cards under one powerful network, with Bank of America managing the back-end rails, not the lending. But the network was fragile, fraud was rampant, cards were stolen from warehouses, and every transaction required manual bank coordination. By the mid-1960s, the entire system teetered on collapse, until an unlikely visionary named Hock entered the picture. Raised in rural Utah, Hock clashed with authority and lived on the fringes, but he believed in nature's balance of chaos and order. While working at a small bank tied to the card network, Hock envisioned a radical new idea, a self-governing company owned by its member banks, not by one entity. In 1970, that idea became real, National Bank Americard Inc. NBI was born, a neutral entity that didn't lend or issue cards, but simply managed the rails for everyone. Hock launched the revolutionary Base 1 system, transforming paper transactions into near real-time digital authorizations that brought speed, trust, and transparency. Fraud dropped, participation soared, but quietly, Bank of America was building a secret partnership with American Express, threatening everything Hock had created. Feeling betrayed, Hock built Base 2, the next-generation processor that could settle transactions digitally, securely, and independently. But success breeds enemies. In 1966, a coalition of rival banks launched Mastercard, later renamed Mastercard, igniting a full-blown card war. To protect NBI, Hock enacted a no-duality rule, but it backfired when one member, Worth & Bank, sued over antitrust violations. The case turned personal. Hock faced threats, vandalism, and emotional collapse, but in the end, he lost the case and had to lift the rule. Despite the loss, Visa was just getting started. By the mid-1970s, Hock knew that to go global, Bank Americard needed a new identity. They chose Visa, short, modern, and pronounced similarly in nearly every language. It wasn't just a name, it was a passport to global expansion. With travelers' checks, holograms, and advanced fraud tools, Visa exploded globally, processing billions across continents. By 1984, Visa was the largest card network in the world. And then, Hock walked away. He believed in decentralization and hoped Visa could survive without a single leader. He was right and wrong. By the 1990s, Visa was no longer a financial utopia. It was a corporate empire, and new challengers were rising fast. Phil Purcell at Sears launched the Discover card, promising lower fees for merchants and more rewards for customers. a direct challenge to Visa's empire. Visa and Mastercard fought back, quietly pressuring banks not to issue Discover, and the US government took notice. In a landmark antitrust lawsuit, the Justice Department accused Visa and Mastercard of collusion. Visa eventually paid billions in damages. Then came American Express, which also sued, and won. And just when Visa thought the storm was over, the retailers arrived, led by Walmart, accusing Visa of charging excessive debit fees and blocking alternatives. It became the largest class action lawsuit in US antitrust history. Visa once again had to settle, for billions. With lawsuits piling up and costs mounting, Visa needed a lifeline. It found one, in the stock market. In 2008, amid the global financial crisis, Visa launched the biggest IPO in US history, raising $17.9 billion. Investors didn't flinch, the business model was too good. Visa didn't lend, didn't take credit risk, but earned on every transaction. It skimmed a fee, called the interchange, from every purchase. That small cut, worth billions annually. And that wasn't all. Visa also earned through assessment fees, data services, and licensing revenue. Owning the rails of commerce meant Visa had built a digital toll booth on the global economy. Today, Visa processes over $12.3 trillion annually, across 200+ countries and 4.3 billion cards. But the biggest threat to Visa wasn't a rival card, it was an entirely new kind of system, born in India. UPI, India's unified payments interface, was free, instant, and growing faster than Visa. In 2023 alone, UPI processed over 100 billion transactions, many that could have gone through Visa. Because UPI had zero merchant fees, businesses across India adopted it with lightning speed. And because it connects directly to bank accounts, there's no need for Visa's costly payment rails. Now countries like Brazil, Nigeria, and Indonesia are exploring similar government-backed systems. Even the US Federal Reserve launched FedNow, a real-time payment system to challenge legacy processors. Meanwhile, cryptocurrencies, CBDCs, and Web3 are experimenting with skipping centralized networks altogether. Ironically, the decentralized dream Hock once had might finally come true, without Visa. But Visa isn't surrendering, it's investing in fintechs like Plaid, and partnering with Apple Pay and PayPal. They're also testing crypto settlements, biometric cards, and AI-driven fraud detection. Visa's strength isn't just infrastructure, it's the ability to evolve faster than the threats it faces. But here's the twist. Hock warned about the dangers of centralization all along. He once said, "The problem is never how to get new thoughts in, but how to get the old ones out." Visa was created to be collaborative, distributed, and inclusive, not just a profit engine. But as it grew into a trillion-dollar toll booth, it drifted from its founding ideals. When it chose lawsuits over innovation, and extraction over enablement, the mission blurred. So the question now is, has Visa become everything Hock feared it might? From a humble grocery store in San Francisco, to a digital network that touches every continent, from a single man's desire to serve immigrants and the working class, to a machine that earns $1.9 million every hour, this isn't just the story of a credit card. It's the story of how money itself was digitized, corporatized, and monetized, one transaction at a time. This is the story of Visa. And the story isn't over. It's still being written. But what if the very forces that built Visa are now the ones threatening to dismantle it? Hock dreamed of a decentralized future. Ironically, that future might arrive, without Visa at the center. Today, payment is no longer a luxury, it's infrastructure. And whoever controls the rails, controls the future of money. As the world races toward real-time, borderless, and free payments, Visa's next move might decide whether it remains a titan or fades into legacy. Because this isn't just about transactions, it's about trust, power, and who controls the future. Visa has money, Visa has reach, but does it still have vision? Will it adapt once more, or will it become a monument to what money used to be? As fintech, governments, and crypto collide, only one truth remains clear. The war for the future of money has only just begun. And at the center of it all lies a question that Hock once asked, louder than ever before. Can we build systems that serve all, without becoming slaves to the very power they create? The story of Visa isn't just about payments, It's a mirror reflecting what we value. Efficiency, speed, profit, control. But the next chapter will ask something deeper. Can these systems also deliver fairness, freedom, and trust? From a humble grocery store in San Francisco, to a vast invisible system moving trillions across the globe, from Amadeo Giannini's desk, to a $1 trillion machine making $1.9 million every hour, this isn't just the story of a credit card, it's the story of how money itself was digitized, corporatized, and monetized, one transaction at a time. This is the story of Visa. And it's still being written.